You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The trading day doesn't start when the opening bell rings. Pros understand that risk never sleeps, and market-moving events happen around the clock. How can you arm yourself with the information you need to understand what's going on across the pond and how it can impact your portfolio? Welcome to the European Market Brief, your go-to source for information on the fast-moving European derivatives markets. Each episode brings you expert insights into the latest market trends, discussions of cutting-edge trading strategies, breakdowns of exciting new products, and analysis of thought-provoking trading activity. The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of VSTOXX, VSTOXX, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com. So join us as we shine a spotlight across the pond and explore the cross-border volatility, regulation, and innovation that makes the marketplace so fascinating. It's time to get the European Market Brief.
All right, everybody. That music means it is Tuesday time once again for the European Market Brief. Hard to believe, already rolling in to episode 11. To me, this is one of the new additions to the network, even though we've added a new show since this show. So a lot going on the full network. Of course, make sure wherever you're listening to this, make sure you're subscribed to the full Options Insider Radio Network, wherever you're getting your favorite podcasts. That will get you pretty much a dozen other shows coming at you. So a lot of great content coming at you every day over there on the network. And of course, if you're ready to pull the trigger to go above and beyond, to join us for, of course, additional exclusive content, pro Q&As, options oddities, deep dives into fun research, early access to some really great stuff, live streams, giveaways, all sorts of fun. We even have a fantasy football league this year. All the fun. The optionsinsider.com/pro is the place to go to learn more. I'm pleased to say I am currently battling it out for first place in the Fantasy Football League. So it's been a good run. If you want to take your turn trying to dethrone me and a bunch of your other favorites on the network, make sure you head on over to the pro. The optionsinsider.com/pro is the place to go as we go around the horn and see who's joining us on episode 11 of the European Market Brief. First, out to the hinterlands of Chicago, or perhaps Indianapolis we go, where we are joined once again by our good pal, Dr. Vic / VSTOXX, a.k.a. Mr. Russell Rhoads from Indiana University these days. Mr. Rhoads, welcome back to the European Market Brief, sir.
As always, thrilled to be here. The DAX has been very good to me in my career, and I'll talk about that a little bit later. So I feel like I'm paying it forward talking about this today.
There you go. Always nice to give back to the market at the end of the day. And then also joining us for the first time in quite some time, Mr. David Russell, the global head of market strategy over there at TradeStation. David, welcome back to the network and welcome for the first time to the European Market Brief, sir.
Thank you, Mark. It's great to be back with you.
It's been a while. I think it's been since the dark days of COVID, since the last time.
I seem to remember that. Yeah.
Last time you and I chatted, David. So really quickly, we have a lot of new listeners, obviously, since the dark days of COVID. And who wants to think back that far anyway? That was a fun time for everybody. But give our listeners a quick overview of your background in the space, as well as what it is you folks do over there at TradeStation.
Well, in terms of me, I do a lot of our content in terms of the blog, direct a lot of the social media, and talk to the media a lot as well. And I do webinars a few times a week talking about trading opportunities. I mostly focus on things involving kind of thematic trends in the stock market, We look to often take advantage of those things with options, and futures are always important as well. I mean, we've been a little bit less active in futures recently, just because until a couple of days ago, the volatility is so low that outside of things like metals futures, people will focus a lot more on kind of small stocks and stuff. But my real focus is kind of thematic focused on where we are in the market, which sectors are performing, and how the overall situation looks in terms of the bigger indexes and the economy.
All right, and then joining us this week in the Eurex hot seat, another newcomer to the program and indeed to the network. He is Eugen Mohr, the Product and Business Development Director over there at Eurex. Eugen, welcome to the European Market Brief.
Hello, everybody, and thanks for having me. It's a great experience to join this call. I've been listening to you before, and it's really nice to join this time for the DAX.
Well, Eugen, as you like to do with all of our first-timers, why don't you give our listeners a quick overview of your background in the space, as well as what it is you do over there at Eurex?
Sure, absolutely. I'm in the space now for 25 years. I started in Germany. I'm originally from Germany with a brokerage firm. And then in 2007, I joined Eurex Deutsche Börse Group in the early days in Frankfurt in the market supervision team. So that's all about daily operations, et cetera, et cetera. And then I moved actually geographically to the United States in 2018 to the great city of Chicago, supporting the Eurex sales team over there, speaking with market makers, banks, brokers all over the place. Lived in the States for 5 years with Eurex, and then moving back to Europe, now in London, looking specifically over market makers, liquidity providers, prop shops, covering the whole Eurex product segment.
All right. Sounds like a good crew to kick off our continental conversation.
It's time to catch up with the thought leaders who are shaping the European derivatives markets. It's time to have Continental Conversations.
All right, everybody, let's get down to business here with the Continental Conversation for this week. And we are going into the DAX. So if you're a fan of the DAX, this is your episode here. Now, if you're tuning in saying, what are they talking about? Maybe you're one of our newer listeners out there, don't worry. We have you covered. We actually have episode 5. I encourage you to go back and check out from July 10th of this year, called, appropriately enough, a deep dive into the DAX. So we're not going to repeat all of that. If you want to go deep in terms of what the heck is the DAX and, the calculation, the methodology, the underlyings, and comparisons to what's going on in the U.S., I encourage you to go back and check out episode 5. The nice thing about this show, it's a pretty new show, so you don't have to go back very far. Just go back to July 10th. You could check out that episode. But Eugen, I think we'll start with you because you have a little bit of a celebration going on over there in Eurex land. In particular, the Mini-DAX turning 10 years old, the mighty 10. Hard to believe Mini-DAX has been around that long. I guess, the last 5 years in particular post-COVID been kind of a whirlwind from a time perspective. But let's talk about that a little bit. Obviously, the DAX ecosystem has evolved since you first listed it with just the big contract. Now we have the minis and even micros. So catch some of our listeners up about some of the evolution and indeed the growth. It's not just the big DAX anymore. It's now the whole DAX ecosystem, sir.
Yeah, exactly. Yeah, Mini-DAX, 10 years. I was at a launch party, so that was really a great thing back then, but time flies, obviously. In general, the DAX ecosystem, DAX futures got launched in 1990, so this is 35 years ago, representing back then the 30 biggest companies, German companies in the index, and reflecting that in a futures index. Back then, futures trading was really in the early steps and not as big as it was in the United States. So it was very little by little. However, there was increasingly demand in trading futures, especially for institutional clients using the DAX as a hedging instrument, but also as an investment vehicle. And over the years, the DAX developed as the main benchmark in Germany, but also the importance of the future was a very relevant part of growing the Eurex business overall. The DAX index or the DAX future back then was quite big, or is still a quite big index with a multiplier of 25 euros per point. I mean, back then the index was around 1,000 points. So 1,000 points times 25. So that was a relatively low notional. Nevertheless, over the time, the index grew and grew. And maybe to add here, the DAX index itself is a total return index. So paid in dividends will be reinvested into the index. So the index itself grows naturally year by year, independently of how the market performs. That leads then in the year 2015 to the launch of the Mini-DAX, making the big DAX or the existing DAX too big already, having like a notional of 300,000 euros, saying like, okay, guys, we need to have a smaller contract because 2015, we have been in Europe already seeing first retail investors coming into that, and having such a heavy notional DAX future was just too much for retail investors in terms of margin payments, etc., also from a risk perspective. So that's why in 2015, we launched the Mini-DAX future on the same index, just a way smaller contract, 1/5 of it. So the index value was like 5 euros per point, with, as said, an increased usage of retail investors or smaller investment firms, just to have an instrument to invest the right way. And then in 2021, I mean, you mentioned it, the dark days during COVID, where people started trading futures actively, and even the Mini-DAX was too big at that time for us in terms of notional value and margin requirements. So that's why we launched the Micro-DAX with 1 index point, so another 1/5 of it, €1 per index point. And this was purely focusing on retail investors. And over the years, we have been seeing increasing client flow especially from the retail side.
All right, a lot to unpack there. Let's keep rolling around the horn. David, we'll go to you next. You know, let's start before we even get into your thoughts on the DAX and everything else. People might think of TradeStation. They think of it for a lot of things, probably primarily in the U.S. context. Maybe if they go back a ways, they think back to the original app store in the brokerage space. That, of course, was TradeStation's claim to fame. Maybe they don't think about Europe and TradeStation in the same sentence. So let's start there. David, why are you joining us on the show today? What does TradeStation have going on in Europe, sir?
Well, we do have an office in London, and Europe is one of the markets we serve. And my focus is always kind of on the American customers here, but definitely Europe is a market we serve. And what's interesting to see is that these products that Eugen was just talking about have absolutely been active and gaining attention on our platform. We do see people engaging in the micros a lot, and I think it's very interesting to see that people are embracing that right now at a time when futures are essentially the DNA of TradeStation. We started as a system, it was a piece of software before it was a brokerage that allowed people to create algorithmic trading strategies way back in the late 80s. And it went on to become a platform that has been always a high focus on futures. So it's only natural that we would have this kind of product available to our customers. And so from my perspective, it's a great addition to have that. But overall, in terms of TradeStation right now, we're at a spot where we really allow people to focus on futures, stocks, and options. So it's kind of 3 areas. And I think this is just a welcome addition to the suite of products we make available.
All right. And Mr. Rhoads, same question for you. Your thoughts kind of on the evolution of the DAX complex. You're out there teaching young minds about finance. So I'm sure for a lot of them, they tend to grok more towards the mini, the micro, the smaller size stuff than the larger contracts. And then also I'm curious, you teased us at the top of the show about your history with the DAX. So maybe let our listeners in a little bit on what is your personal connection to the DAXster.
Well, about 15 years ago, I'll do it in reverse, and I'm actually going to endorse TradeStation while I'm at it. You're welcome, David. So I ran a CTA for about 3 years in the middle of, I don't know what we call the first decade of the century, but it involved trading all the financial futures, and I traded DAX futures as well as a couple of other. I did not trade the VSTOXX 50 futures, but I traded the DAX futures, the FTSE, and the CAC, and in addition to some U.S. futures, and I also traded Bund. So there were a few things that Eurex lists that I incorporated in that whole. And it was basically a breakout or a fade program, depending on what the day looked like. And DAX was one of my, I went back and looked at my numbers over the weekend because I don't throw anything away, according to my wife. And DAX was the most profitable market for me in a reversion to the mean program that I ran. Of all the European markets.
You ran a CTA around the DAX 15 years ago. You're full of surprises, sir.
I know. No, there was a short period of time where I didn't have anything to do with options, and that's just because I had come up with a pretty good breakout combined with reversion to the mean type system, which I had back tested with U.S. markets extensively using TradeStation, but had to use a different broker to execute my European orders. So
there you go. If you had just waited 15 years.
Back then, I don't know if I just waited 15 years, I could have done the whole thing on TradeStation. But a big portion of the back testing that I did with that was along those lines. The success was because DAX was a little bit more volatile than some of the other indexes, and that reversion to mean program worked very well with those indexes. For instance, in the U.S., it worked best on the Russell, as opposed to the NASDAQ and the S&P 500. So yeah, that was one thing. Also, you talk about the evolution of the DAX. I've been around for a while. I've been around when I was on the floor and people were trading D-marks as opposed to the euro currency. So not only has the European market gone through the emergence of new ways to gain exposure to the different major indexes, but just also, having a pan-European index versus what we used to consider the absolute benchmark for European market. If you listen to the business news on the way in the late 80s or early 90s, and they told you what was going on overnight, it would be the Nikkei and it'd be the DAX. So it's a market that an awful lot of people pay attention to. With the launch of the VSTOXX 50, there are all kinds of great things to do between the two indexes. There's a good amount of overlap, but not perfect overlap. And that's one of the things that we look at an awful lot when we're exploring the VSTOXX 50 is what's going on relative to the DAX. And they pretty much have the same products available as well. We've got daily options on DAX, daily options on the VSTOXX 50. So if there are any divergences, it's not market structure; it's just the differences in the indexes. So that's really how I think about DAX. Is still a good benchmark with respect to Europe, and I think looking at it next to the VSTOXX 50 makes an awful lot of sense when you're thinking about trading things.
That it does, sir. Eugen, you kind of touched on earlier some of the different sizes, but as Russell and David alluded to, everything small is super sexy these days. So let's dive into specifically some of the micros and minis. Hit our listeners with the specs, the notional sizes that we're looking at there in comparison to the big boy, the original contract. I think for the lion's share of our listeners here, that's where they're going to focus their attention and liquidity. And then speaking of liquidity, give us a bit of a glimpse behind the scenes. What are you seeing right now in terms of liquidity, action, interest? Which of these contracts, I should say, are really resonating with the clientele out there these days?
Mm-hmm. Yeah, good question. So in terms of different sizes, I mentioned it in the beginning. We started with a 25 euro multiplier per point, which then became at the DAX level of 25,000 points, like a super heavy contract, 600,000 notional euro. Therefore, we launched the smaller one in 2015 with a 5 euro multiplier per point, which is still, as an index level of 25,000, over 100,000 notional. So that's still a very heavy contract compared to other indices. And then it says with the micro futures, with the multiplier of €1, index level of 25,000. So that's a 25,000 euro notional. And more importantly, then the margin levels also, of course, went down respectively. And that enabled clients then to easier access the market. And I mean, when you trade intraday, margin requirements can be even lower. In terms of liquidity and in terms of market participants, I would say liquidity in all three DAX futures are very good. We have a healthy ecosystem, especially for VSTOXX and Mini-DAX, with market makers, with HFT firms, with prop trading firms, but also with banks and asset managers who use the DAX index, even the big DAX future index, as a hedging instrument, but also as a strategic, as a tactical investment vehicle. The same applies for the Mini-DAX, just with a smaller size. Also here we have excellent liquidity. We have 5-6 active market makers continuously quoting the product. We have another high number of prop trading firms who are trading the product in and out. So we have excellent liquidity there. Just with the different same index, just smaller size, which then helps in particular smaller hedge funds or firms where the exposure is not so big to use the DAX on a more granular level to hedge positions or use it as said for tactical trades. And then last but not least, the micro DAX, same story, very liquid, very tight spread, good size to trade in and out every day during the trading hours with a 1 multiplier, and that's purely retail focused. We have a good size of market makers there, but we also have a very high share of retail brokers all across the globe. I mean, obviously the biggest crowd who's trading micro futures are coming from Germany from Europe, but we're seeing an increasing number from US investors looking into that product, but also from Asian investors. DAX, micro DAX futures in particular is very interesting.
All right, let's keep the party going on the liquidity and volume and just interest side. David, as our duly appointed broker representative on the show, your boots on the ground out there with the customers, the clients, what are you seeing in terms of interest? And I'd have to imagine for you and for a lot of your clientele, there's really been a big uptick, a big groundswell of interest in a lot of the more bite-sized contracts. Is that where you're seeing the lion's share of the interest these days over there at TradeStation?
Absolutely. It's been true across different futures. And one thing I'll say is that the DAX micro is the leading one that I've been able to see so far that Eurex offers on TradeStation. So people are definitely engaged with it. They remain active in the big index as well, the big DAX. Now I looked a few weeks ago, I looked, and the minis were ranking up pretty high. And this month they're not as active, but the micros are definitely up there. Now, there's actually one thing Eugen, I think, overlooked with his own products is that the Euro bond has actually been pretty active in the last few weeks. So I think that's also one that's been jumping up there. There's another one of the products that we're seeing on our platform. Maybe I'm not sure if it's as clear on that side, but we're definitely seeing that. So I think customers are active in these for a lot of reasons. And when we look at it, I think global stocks were really pretty boring for a long time. Coming into this year. But then when 2025 started, the dollar was at a high and it started retreating. And then we have the trade war, which kind of drove people in some ways away from American assets in different ways. There's this huge engagement in global equities this year. Now, part of that was also because we were expecting Fed rate cuts, which kind of weakened the dollar. It's hard to really separate all the pieces, but at the same time, this year saw a real surge in global stocks and European stocks. Now, if you look before that, the DAX was kind of following the S&P 500 for many years here, but this year we saw a dramatic outperformance of the DAX over that. So I think right now, when you look at it and when you look at things like valuation, I think that in some ways the European markets are kind of coming back after years of being not as interesting to a lot of customers. So I think having the DAX futures in the toolkit right now for people to go to at those moments is really a huge thing. And the thing I like, I was talking to Eugene earlier, he made this great point about how people can trade multiple opens. So, the DAX opens in the United States at 3 o'clock New York time. I always think in New York time, because I'm focused on like Wall Street, but basically it opens at 3 in the morning, and then you basically have the U.S. Open at 9:30 Eastern, and then you have the the German close at 11:30, right? It's 11:30. So you basically, a person could start at say 2 in the morning if they're on the East Coast. They could trade 2 opens and a close and still be done by lunch. So I mean, for certain people who want to, for traders who want to structure their life around certain markets and things, this actually gives significant kind of opportunities. And we're talking about major indexes that have those kinds of opportunities and liquidity. And what I also like about it is, aside from the Fed, you're getting all the economic data in there. When there's ECB meetings, when you're getting claims and all the main economic data, when we don't have a shutdown, I'll say, because I've been waiting on all this data we're not getting. But when the data comes, it also falls in that window. So it kind of gives you a good diverse set of products that are related and have a degree of correlation, but they also have their own sort of catalyst, which is really kind of perfect for traders. It's kind of like going across a basket of like tech stocks, and one day you're trading Amazon, one day you're trading Meta. It's the same sort of thing, and it offers that kind of variety in a way that maybe the American indexes do not, because they also all follow the same opens and closes. So I think it's really a huge opportunity. And I think as we look forward and we recognize it, now I believe that global stocks are now kind of going to make something of a comeback because the American valuations are so high. And at this point in time, I think when we look out into the future, there is kind of a likelihood of more rate cuts and things like that. So I think having this sort of these products on your radar is a huge plus going forward for our clients.
That's a great point about the data and corresponding well with the hours for some of these products we're talking about. So yet again, listeners, yet another reason, even if you're not trading these, maybe you should at very least be paying attention to them, because they do give you a little bit more access hours-wise to some of that data we're talking about here. Again, when it is being disseminated, which of course it is not right now. Russell, speaking of data, I'm just curious, there's an interesting topic you and I and a lot of the guests on the network have been mulling over and or debating for better part of the last few years, is the impact of this growing segment of zero DTE options on segments like we're talking about here. Obviously here we're focusing a lot on the micro and the mini futures, and a lot of those players come in to do a lot of intraday swing trading, which now a lot of that is being traded by a lot of zero-day options traders. So I'm curious on your thoughts of the impact, the evolution, or maybe some of the battle between the zero-day option space and some of what we're talking about here today, these micro and mini index futures, sir.
The zero D, you were talking about anniversaries. I believe that the zero DTE options just had their second or third anniversary at your. Well, it's my birthday. I remember it's on my birthday. That's actually how I remember the date, which I know has nothing to do with anything. But so I was paying very close attention to them when they first launched, and you didn't see any cannibalization in any of the other products. If anything, it appears to have been additive. And actually, I was getting the VSTOXX and the DAX launches mixed up there. Sorry. It's the VSTOXX that was on my birthday. But the DAX, just the zero DT, there's not the same sort of systematic selling that we're seeing in the U.S. So they behave more like closer to how you would expect. And what I mean by that is, we have this whole idea that option sellers do better than option buyers. We've found in very short dated index options in the US, option buyers actually do better. And I think that's because there's a lot of systematic selling that's artificially pushing those prices down. And I mean, even yesterday, if you had bought a straddle, I know we had a fairly big move, but that was on the heels of another big move in the U.S., and that would have worked.
Yesterday was a good day to have a straddle or two in your back pocket, and today's not looking too bad either.
No, it's not. But over in Europe, if you're a consistent straddle seller with the shorter dated options, you actually do better than you would in the United States. In fact, in the U.S., depending on the tenor and the method, you might actually end up consistently losing over a long period of time. So the behavior between the two has been very interesting in my mind. But I don't, just looking at the tape on both of them, and I kind of review them on a weekly basis, it doesn't really appear that people are trying to use them to hedge, a specific event just one day before the event. That the hedging still seems it may incorporate the shorter dated options, but it doesn't seem to have really bitten into it. It's just into that volume. It's just created a new use and created more liquidity within the space.
Sounds like we have a new research paper on our hands, Russell. European versus American straddles, which is the way to go.
I've got the data. I just got to do the writing.
I think more than a few people might be interested in. Maybe you have a whole dedicated episode of this show coming up down the road on this. We'll call it the straddle battle. How does that sound?
Oh my gosh!
Now
all you ever want to do is put me in fighting gear and put a poster out there.
That does work too. The folks like the AI images of you. But yeah, I've committed you now to a future show. So by all means, get the interns cranking on the data. Speaking of the data. Eugen, you see the data day to day over there on the futures and indeed on the option side. I'm curious from your perspective, the evolution, the interplay, the Venn diagram, if you will, of the 0 DTE index options on one front and then the micro and mini futures on the other side. How are those two sides getting along? Are you seeing any cannibalization between the two? And we're fixating here on the small stuff, the bite-sized stuff, for obvious reasons. That's what resonates to a lot of our audience out there. But, there's still some interesting dynamics going on the big boys, and also maybe some interesting players out there that are playing in that universe that don't play in the micro and bite-sized stuff. So if you have anything you want to share with our listeners on that as well, have at it, sir.
Yeah, absolutely. This question always comes up when we list new products, in particular when they're on the same index. Is there cannibalization to be seen, and what could be the negative impact about it? But for both products, the micro launch, but also the 0 DTE launch, there was no cannibalization to be detected. This was all additive volume. I mean, what we do see from the big DAX to the Mini-DAX, there's a swift transfer from the big DAX, because the FDAX, the existing, the old one, becomes just too big and it becomes hard to handle. So we see there a move from the big DAX into the Mini-DAX. But for the micro futures, this was totally new volume. As said in the beginning, this is a pure retail product, and we see the demand and we see the strong interest from retailers around the globe. And this is all additive volume. Same applies for the 0 DTT options. Also here, the discussion was, will that affect? And here the difference is we have 0 DTT options on the DAX, but also on the Eurostoxx. And on the Eurostoxx, the 0 DTT options are more traded than on the DAX. But also here, this is additive volume, and we see a new clientele of customers using these. On the DAX, more on the retail side, but on the Eurostoxx also from institutional investors coming into this market and using the specifics of that product expertly for their trading purposes.
Yeah, I think we've had a lot of data now under our belts. It seems like it's been an eternity with the 0 DTE realm. It's really only been a little over 3 years out there. So as more data comes in, I'm sure there will be a lot more to talk about this. Speaking of data, really quickly, Eugen, for our listeners out there listening, primarily in the U.S., they may be curious about the hours for the DAX, and also from your perspective and from their perspectives, what are the key hours? When is the DAX the most active, and when should they really be paying attention, sir?
In terms of trading hours, we have a 21-hour coverage. In the beginning, as said in the 90s or in the 2000s, we were only covering European and US hours, but we expanded the hours about also 7 or 8 years ago into the Asian hours. So we are available from PM after hours in the US until US close. In terms of active trading volumes, I would say, most activity obviously takes place in European hours. Here to mention is the European Open. That's where the most active trading takes place. Indices open, people come into the market and need to find the right direction. So that's always like where it's going to be very busy. Over the lunchtime in Europe, it's getting quieter, but people prepare for the US opening. And then we see the second boost of activity, and this is when when US markets open. And then the third, or that goes hand in hand, this goes over the whole distance, when we have the European close. That's, what is this, like 10 p.m., 11 p.m. US time, East Coast time, where we see the peak volumes. We still see good volumes and liquidity also during the rest of the US hours, but volumes slow down. However, if there are like Fed fund rate decisions or other stuff going on in the US, then the liquidity is there, and volatility or volumes also kick in here.
And David, obviously, most of your clientele is based here in the U.S. We still have a lot of listeners, and we can look at the numbers and see we have a lot of listeners. They're based here in the U.S., and we know a lot of them are still, let's say, European curious. They're tuning into a show like this because they're intrigued by what's going on there, but maybe they haven't pulled the trigger for one reason or another. Maybe they're still intimidated by the products, even though we're doing our best to try to make them a little bit more familiar to the listeners. Maybe the hours intimidates them. Maybe there's still some nuances of the products that are a little bit different or a little bit intimidating to them. From your perspective, David, as you're looking at the U.S. audience, what are some of the things maybe they should be aware of when they're attempting to come to grips with these European markets? Maybe some obstacles you've seen that some U.S. traders have to overcome when they're coming to grips with these markets, outside of the obvious, which is that they trade on different times.
Well, I think it's important to recognize that it's simply a different, entire country, political, regulatory system. They have different sort of events that can move them. And so to understand that and to spend some time, what I would do would be to spend some time actually reading some of the publications that are focused on European markets. So kind of just understand what are the basic things that move them. We know in the United States, the big AI names, things like the Fed and stuff like that. It's good to familiarize yourself with some of those things. And what I would do with TradeStation is to basically backtest. You have a huge amount of historical data and the ability to do analytics to kind of see different sort of patterns that emerge over time. So from my view, there's a great opportunity to leverage the technology that TradeStation, has as our DNA, which is the ability to backtest, and then you can create automated strategies that can be tested to kind of test some of these different things that work over time. So that to me is kind of the immediate thing to kind of think of. Now, I'd also mention that, TradeStation is actually rolling out a new platform that's going to have some other sort of functionality that people should know about, involving some of the things that's going to make it easier for futures traders. We're going to have a matrix that's going to allow people to zoom in and out on price. And for options, there's going to be a lot of support for things for people pairing up, their stock and the options trading. It's going to be a more intuitive and powerful platform. It's called TitanX, and we're kind of rolling it out now. Some people are getting it. It's going to be coming out in the coming months. But I want to just kind of mention that because, TradeStation is all about, on the one hand, understanding patterns in the past and the analytics, but also making it easier to execute trades on some of these sort of products like the Micro-DAX and things like that. So I would just say that to leverage both of those sort of aspects of TradeStation would be the way I would handle some of the, the uncertainties you talk about of dealing with a foreign market.
I like that. TitanX. It's a good product name there, David. Russell, same question for you. You're dealing with a lot of the young minds of the future coming to grips with these markets. What are some of these stumbling blocks and obstacles you see? And also from your time, your dark days as a CTA, slinging the DAX. Any lessons you learned, or maybe some opportunities you spotted that you might want to highlight for the folks, sir?
Well, yeah, you always need to keep in mind, what you can trade from different jurisdictions, and you can definitely trade the futures at Eurex. So it gives me a good market to talk about when I'm comparing. And just about anything I do international, I use the European markets as my comparison in the classroom. Probably for a variety of factors, but my thinking, if I were tied to my desk all day and still trading like I used to, and looking at it, and everything was in 15-minute periods, one of the things that I did was I did have systematic approaches to trading the major index futures. Typically, I would trade them in a reversion to the mean format, but in the last hour, if they made a new high or a new low, I would buy those breakouts or those breakdowns and hold them into the close. And trading a bunch of systems against each other, having two closes in the same day helped with my diversification among the systems. And also, if you think, and I think all four of us at one time have been tied to a desk or tied to a market on the floor, et cetera. I was on one of the floors yesterday, mid-afternoon, and it was dead quiet. And I was with my kid. My kid was like, "Why isn't anybody doing anything?" I said, "It's really busy around the open. It's really busy around the close." Well, if you're using, the European derivatives that can trade in the U.S., you get two closes each day. Also, maybe sometimes you have to get up at 2 a.m, but we'll stick with the positive behind the being able to trade things into the close like that. Or, I mentioned, short-dated index options and how they tend to be overpriced. The way I look at them is on the close the day before, they expire. And, if you want to approach that in a systematic method, there's a great opportunity to do that because the rest of the U.S. markets are fairly slow when you'd be executing that.
Isn't that always the way when you bring a visitor down to the floor? You can guarantee it's going to be absolute crickets. Nothing going on down there. Yeah. Not impressive at all. Well, it's hard to believe we're already starting to come up against it here. An hour flies by when we're talking European markets, but I want to go around the horn, get everyone's thoughts. Maybe looking ahead a little bit. Eugen, we'll start with you. We've been focusing a lot on, the micro and the mini and the bite-sized stuff for obvious reasons. That's kind of the sexy stuff in the space right now. But you've been in and around the DAX complex for a while, which, by the way, hard to believe, 1990. A long run out there in the DAX. That said, looking ahead, as you're looking at the complex and some of the products you may have coming down the pike, where do you see the DAX complex going? Is it all about the micro and the mini and the bite size these days, or are there some other interesting trajectories you see coming down the pike, sir?
Well, as said, it's a total return index, so the index itself the index values become higher and higher. So introducing mini contracts, introducing micro contracts, not only lowers the barriers for new people trading the product, but it's like adjusting on the notional value level. So this just a natural process, I would say. We just launched 1 year or 6 months ago, actually, nano futures on crypto. That's not related to the DAX now, but that's obviously where the direction is going. Bitcoin crypto, that's a completely different field. But in terms of contract size, we have the flexibility to adjust the sizes as it is necessary and as it's best tailored for customers. So size adjustment is always something that can and that will take place. But of course, it's not only adjusting the size; it's also adding side products. At Eurex, we have different sector products where we focus on certain sectors where we can launch respective products, but also other products can be added. ESG is not a big thing in the United States, but in Europe, it is a big thing. So we have ESG listings on the DAX, which complement the offering. So that. I mean, we need to listen to the market, and based on the requirements of the market, we can add on. And as an additional point, I mean, education obviously is a very important thing. Eurex historically was more an exchange for institutional clients and not so much for retail clients. So the whole retail movement, as we have seen it in the US, especially after COVID, is just following up at a later pace in Europe. So that's something we work on as well. So Eurex has various retail broker agreements to educate end clients and to open the market for new clients and bring them on the table, but most importantly, educate them and also show them where's the risk. So I would say that's where that's our future activities and where we try to help the customers the best.
David, same question for you, sir. As you're engaging with the retail day in, day out, where do you see this space on the index futures side evolving? Is it all about micro and mini, or are there other interesting evolutions you're seeing? And also on the index front, sounds like you've been paying a lot of attention to a domestic index as well. What's catching your eye out there, sir?
Yeah. Well, I'll say that the Russell 2000 is interesting because, it has been the ugly duckling for a long time here, but it's actually showing signs of breaking out above the highs from 21 and last year. And also what's interesting is if you actually look at the makeup of the Russell now, it used to be like regional banks and biotechs. Now, look at the top ones. You have quantum computing, you have fiber optic stocks, you have all these things that are now popping up, new defense tech, some of these new companies or the new military technology companies making drones and stuff. So the Russell has quietly reinvented itself, and it's showing some real relative strength against the broader market here. And I think that's actually pretty interesting. So we might be starting to see the thing, like Mark Douglas says, in trading, you have to be focused on the now flow of potential opportunities. And the now flow of opportunities might actually be a breakout in the Russell. So I want to throw that out there. But the other thing, look at today's news. Jamie Dimon talks about weakness in the credit market. Look at the dollar index rallying up to kind of a high and stalling there below its high from a couple months ago. So I'm looking at that right now and I'm wondering, weakness in the credit market, what does that mean for the Fed? It probably means more toward dovishness. What does that mean for the euro, the dollar index? And what does that mean to the DAX? The DAX basically made a move from mid-September to last week, and it's basically holding a 50% retracement of that rally. So I'm just wondering here if quietly we don't see the dollar start to peter out and roll over, and maybe we actually see a breakout in the DAX after a few months of consolidation. So I'm not trying to predict anything, but I'm just looking here and I'm seeing some potential setups that maybe actually are going to put the German markets back in the leadership position.
All right. And Russell, the last word on this topic is yours, sir. What do you see in terms of the evolution of this space coming down the pike, sir?
I think we probably continue to see, interest in the country indexes. Something we haven't, or the indexes over in Europe that are specific to countries. Something we didn't touch on as much as I would like to have. There is a DAX VIX. To keep that in mind, it typically is at a premium relative to the U.S. version of the VIX, and there's also a VIX on the VSTOXX 50. The DAX VIX and the VSTOXX 50 VIX, the VSTOXX, they alternate which one's elevated relative to each other. It's about a 40-60 relationship, which in my mind, if you're thinking about looking at short-dated options and you've got an opinion on the European markets, maybe it's an either-or decision in there, where you look at if DAX options are a little bit expensive, maybe you go to the VSTOXX 50 or vice versa. I know that's outside of the U.S., but it's just something that you definitely would want to keep in mind.
We always keep you folks in mind. We got a little bit of time left. Let's see if we have enough time to answer the red phone.
What's on your mind as you're navigating the wild world of European derivatives? Let's find out as we answer the red phone.
All right, listeners, welcome to the red phone. Of course, your segment where you take the reins, your questions, your comments. No shortage of ways for you folks to get in touch with us. At options on most major social media platforms. Questions at theoptionsinsider.com also works, of course, if you're hanging out in the pro. you can use the live chat. Again, no shortage of ways. Thanks to all of you out there who are listening and engaging with the show. We appreciate all of you out there. Whenever we launch a new show, it's always fun to see the folks responding, just like Vol King did this week. By the way, you get points for a great handle there, Vol King. He says, can you discuss recent activity in VSTOXX options during the sell-off on Friday? I'm assuming you mean we're recording this, listeners, just a few sessions after a big sell-off last Friday. So I'm assuming you mean the recent sell-off, Vol King. He says, was there a commensurate move in VSTOXX? Also, are there any more ratio spreads going up in VSTOXX against a big end-of-the-year move in volatility? Well, when we're talking VSTOXX options, we have to go to Dr. VSTOXX. Mr. Dr. VSTOXX, sir, were you watching VSTOXX during the big sell-off last Friday, or were you too busy loading up on your UVIX for the weekend? Which, by the way, I did a little bit of that too, so I helped you guarantee that Vol would come in on Monday. And then you have any thoughts here for Vol King about the moves you're seeing in VSTOXX, and he wants to know particularly about ratio spreads. You seen any of those?
Yeah, there was, it's funny, there was somebody did sell 1,000 of the V's November, right? No, V's October. My bad. Yeah, they sold 1,000 of the, and this was, keep in mind that we were joking around about what happened on Friday, that I was at lunch and I came back and that the S&P had moved 100 points. So, but that means that was happening during lunchtime in the U.S., and, outside of, VSTOXX was still available for trading, but kind of outside of the main hours over there. There was one trade where somebody sold 1,000 of the 20 puts and bought 2,000 of the 25 puts while all that was going on. They basically paid 45 cents for that. So as long as they get, as long as VSTOXX settlement for October comes in below, gee willikers, 24.15 or so, no, 24 and a half or so, they're going to do very well on this trade. So there was one of those ratio spreads, which it seems like ratio spreads are pretty popular within the VSTOXX complex. But I feel like the selling, because a big portion of the activity was late in the day, US-wise, it didn't necessarily show up in the VSTOXX arena.
Interesting stuff out there. So ratio spread starting to creep back in. It's been a little bit since we've done our deep dive into the volume and OI out there in VSTOXX land. Might require a little bit of a revisiting on a future episode of Volatility Views, even perhaps, Mr. Rhoads. But Eugen, you're also out there watching some of the action out there in VSTOXX land. What do you have to say for our friend here, Vol King, who's interested in what we're seeing out there right now, sir?
Yeah, volatility is a very interesting product. And we at Eurex, we put a lot of energy and a lot of thoughts into that. As you mentioned, we have the VSTOXX in Europe, which is the equivalent to the VIX. It's reflecting the implied vol for the Eurostoxx 50 options. So same methodology, same calculation. So pretty much a one print from the US to Europe. However, VSTOXX can become interesting, and we have seen this many times when there were French elections or when there were any other external effects. VSTOXX and VIX typically have a high correlation, so they run in parallel. But as said, if they are like external events, then there can be a change in European volatility versus US volatility. And that's when trading opportunities arise. And it's interesting to see what Russell alluded about the ratio spreads that we have been seeing on Friday. So obviously people are, looking forward or having something in mind about different volatility levels coming up. So it's interesting to watch this. And as said, also for VSTOXX, for the future suite, but also for the option suite, we have the liquidity there. Market makers are quoting on a constant basis. We have tight spreads over all products. So if there's a trading opportunity, please go ahead with the VSTOXX segment at Eurex.
All right, that music means we've come to the end of another hour-long sojourn through the world of all things European markets. But before we go, let's go around the horn, give everyone a final chance to plug their wares, so to speak. David, we'll start with you. You did an able job returning to the network after a half-decade hiatus. If folks are intrigued about all things TradeStation, they want to check it out, maybe including your new upcoming platform, where should they go? What should they do, sir?
Well, you can just look for TradeStation Titan X. It is rolling out kind of incrementally. There's some people who have access to it. More is coming soon. And so you can just check that out on our website. I do live streams on Monday afternoon. I look at the big indexes. On Thursdays, I do another webinar when I kind of look at the overall trends that are happening. So those are the kind of things I do. I do a blog on TradeStation's website. You can check those things out. And, I'm looking right now, and I think it's fascinating that with the kind of slightly weak economy, we're actually seeing this growth now of these kind of new tech stocks. There's a lot of opportunities in that. And the last thing I'll just add is that TradeStation has recently started doing a kind of concierge service for certain clients. And it's a great opportunity, I think, for people to kind of just realize just the quality of customer service we have.
There you go. Check them out. You know where to find them by now. TradeStation.com. Check out their new Titan EX platform. Sounds very intriguing. And Eugen, if folks are intrigued by all things DAX, maybe they want to learn a little bit more, or maybe check out some of the other products we talked about, where should they go? What should they do, sir?
Well, I mean, the main source of information is, as always, the internet. Our website, Eurex.com. Where you can see a full overview about our product suite. It's not only the DAX, it's not only the Eurostoxx. As mentioned by David, we have the fixed income futures, we have the volatility suite, we have the single names. So it's a vast variety of products you can trade. So Eurex.com is the source to go.
There you go, Eurex.com, EUREX.com, the wellspring from whence all this content flows. Check it out over there for yourselves, listeners. And speaking of content, Mr. Rhoads, when can we expect the results of our straddle battle? And then what else do you have cooking that might interest the folks, sir?
Doing that. I've been doing a kind of a cool study on the dividend futures that trade over there. So that you may see that first. Just because I've always found those a very interesting product, and I know and they have their own unique behavior. So I've been digging into that and using about a decade worth of data to take a look at how they act, but also some of the predictive things out of them with respect to company fundamentals.
But straddle battle sounds so cool, and it rhymes, sir. So I've given you free gold.
It does.
And if they want to check it out, where should they go?
Just follow me on the Twitter, and I always tweet the things I do.
There you go. 2 S's, 2 L's, RHOADS on Twitter/X. That's going to do it for us on the European Market Brief today. Not going to do it for us on the network, of course. We'll be back in a little bit with a fun hit. It's time for our annual check-in with the folks over there at A Leg to Stand On, talking about their upcoming charity events here in Chicago and New York. It's a great event. We'll let you know all about it, where you can support the cause. If you're hanging out in the Pro, that will be coming up in about an hour. Yet another reason to join the Pro. You get to hear that one live. And, of course, we'll be back at the conclusion of the trading day to wrap everything up with the newest edition. Yes, hard to believe is another new show since we launched this one. But, yes, the newest addition to the network, of course, the Hot Options Report. Then we'll back with our usual array of content till we're back again on another Tuesday with another episode of the European Market Brief. Stay safe out there, everybody.
The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of VSTOXX, VSTOXX, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.